Hey everybody, quick video today, but I think it's going to be important, especially if you're an investor in broad-based S&P 500 tracking funds. Now, over the last few months, I've been hearing more and more people talk about how basically in every situation over the last few decades, anytime after a Federal Reserve interest rate cut, the broad-based market, the S&P 500, and any tracking funds, they're higher a year after. In fact, some studies put it at 100% win rate. That means after 1 year after a Federal Reserve or the Federal Reserve begins their interest rate cuts, you're basically guaranteed to make money. Now, this video is not to say that that is inherently false. In fact, I do think that it is a good time to invest in the stock market. This video is to caution that train of thought, primarily for one main reason. And when I tell you, it's probably going to sound very simple, although I don't hear anybody talking about that. And that is that, yes, almost in every single instance, after the Federal Reserve starts cutting interest rates a year later, the S&P 500 is higher. The thing is, that would be now, because the Federal Reserve started their FFR cuts last year in September, and they continued that through December of 2024, which means we are a year later. Which means that the data did hold true. A year after the first FFR cut, the stock market is higher. The problem is people are instead conflating that with the most recent FFR cut in September last month, that in a year from now, the S&P 500 is going to be higher. But in reality, the FFR, most of this data, when it comes to the stock market and the S&P 500 being higher a year later, most of this data is after the first FFR cut. That already happened, and it happened almost a year ago. In fact, it was over a year ago. Yeah, September to September. So that would be today. That would be right now. And when you look at it from that lens, once again, the data held true. The stock market is higher now than it was a year ago. But to then say that in a year from now it's also going to be higher, that you should invest in the S&P 500 specifically because of that reasoning, that would be 2 years after the first FFR cut in this cycle. Now, a lot of people are going to counter that. Maybe even you might disagree and say, well, yes, but it's been so long that really people are seeing today as the first FFR cut. And there is some logic to that because when you look at this data, when it comes to the stock market being higher, most of it is because people are anticipating an easier monetary policy. So while most of the data tracks the stock market a year after the first FFR cut, in reality, because the market is forward-looking, it simply means that the market is reacting to the fact that cheaper money is soon going to be available. And that still holds true today. Because yes, the Federal Reserve started their interest rate cuts a year ago, but they're going to continue that well into 2026, barring some major inflationary catastrophe. The more pressing matter right now is the jobs market. So it's very likely that they're going to continue that. And because of that, I myself do think that right now is a great time to invest in the stock market. Again, this is not financial advice, but I will give one real important piece of not financial advice, although I think that this is just general. It is a great time to invest in the stock market if your time horizon is long. That means 5+ years. If you are retiring soon, or you want to retire soon, you should not have the bulk of your net worth in the stock market. It is unsafe, it is dangerous, and it puts your retirement at risk because the stock market is more volatile than other assets like real estate, like bonds, like bond ladders, like all these different things that you can do in retirement that are just, I don't want to say better than the stock market because the stock market is going to make you more money. But for example, bonds, real estate, those are more stable assets. So as long as you are not retiring tomorrow, it is, I do think, a good time to invest in the stock market. I think that for myself, I think that for other people, but to do it based on the logic that a year after FFR cuts, the stock market is higher in 100% of instances, that already happened. Okay, we're going 2 years out from the first FFR cut in this economic or this Federal Reserve monetary policy cycle. So just keep that in mind. I haven't heard anybody else say this or talk about it, although I think it's very important to mention. With that said, I don't want to drag this video out for no reason. I want to keep it short and to the point. If this was informative, if this changed your perspective a little bit, please consider subscribing. It helps the channel tremendously. It's difficult to grow here on YouTube, so every subscription means the world to me. I do weekly videos here, although lately it's been much more frequent because there's so much to talk about in regards to finance and economics in this crazy world that we're living in. So I hope to see you in the next video. With that said, I hope you have a fantastic rest of your day. I'll see you in the next one. Take care.